News Transcorp Power PLC, one of the subsidiaries of Transcorp Group, has hit significant milestone in financial performance for the fiscal year of 2024, signaling growth in revenue and profitability. The power company, in its latest audited results submitted to the Nigerian Exchange, reports a 115% increase in revenue and 165% growth in profit after tax, demonstrating strong operational and strategic execution. The report shows that the company's gross profit grew by 89% from 75.4 billion naira in the financial year of 2023 to 142.2 billion naira in year 2024. It also shows that returns on assets increased from 13.5% in 2023 to 20.17% in 2024. Chairman of Transcorp Power, Mr. Emmanuel Norum, emphasized the company's focus on stakeholders' value, making it one of the most formidable power operators in the country. Also, the Chief Executive Officer of Transcorp Power, Mr. Peter Ekenga, attributed the results to the company's strategic investments and deliberate focus on enhancing operational efficiencies. Company's board of directors proposed a final dividends of 3.50 naira per ordinary share, with a combined interim dividends of 1.50 naira paid at half year, brings the total dividends for 2024 to 5 naira per ordinary share. The Independent Petroleum Marketers Association of Nigeria has advised the federal government to hand over Nigeria's refineries to private investors to boost its performance and ensure sustainability. President of the association, Mr. Abubakar Shetima, gave the advice at the association's annual general meeting in Abuja, Oyo State. We have more in this report.
Since the revival of Nigeria's refineries, particularly the ones in Port Harcourt and Warri, along with the establishment of Dangote Refinery, there have been high expectations among Nigerians for a transformative impact on the oil sector. Despite the government's commitment to enhancing the refinery's operations, Nigerians have yet to significantly feel the impact of this development, as they all expect significant drop in fuel prices.
It is very, very important.
Speaking during the annual general meeting of the Independent Petroleum Marketers Association of Nigeria, the president of the association believes that handing over these assets to private investors may be the best way forward.
Yes, actually, it's better. Let them privatize this refinery, and especially they should give the proper people that are concerned, like independent petroleum marketers. If the government can try as much as possible and sell this refinery to independent petroleum marketers, it will add more value to the Nigeria.
The event also featured the election and inauguration of new executive members of Ipman Southwest Zone. The newly elected chairman of the zone promised to continue the good works of his predecessor and building upon existing achievements.
What this government is particularly about is how our 5 depots in Western Zone will start operation. Because anything that we are, if NNPC depots, that is 5 depots in Western Zone, if they are not working well, so there is no miracle that we can do. But we use everything. We use the PTD, Nupeng. You heard that we have a tripartite that we are doing with a NATO, PTD, Nupeng. So all those avenues, we use it to make sure that all the 5 depots in Western Zone are working.
The new executive member coming in, they are my baby, and by the special grace of God, I'm going to nurture them, and I'm going to give them all the necessary support.
With the new leadership in place, expectations are high that the Ipman Southwest Zone will continue to thrive and address the challenges facing petroleum marketers in the region. Oladio Yewole, TVC News, Ibadan.
Well, the International Cargo Tracking Note is set to kick off at Nigerian ports by the second quarter of 2025. Executive Secretary, Nigerian Shippers Council, Mr. Payo Sakuta, made the announcement at the Council's 5-year strategic retreat with theme The Future Transition from Nigerian Shippers Council to Nigerian Ports Economic Regulatory Agency. Ifnaya Eze reports.
Highlighting key plans for the maritime sector, Mr. Payo Sakuta explained that the implementation of the International Cargo Tracking Note system will enhance revenue generation and improve oversight under the ministry's guidance.
The International Cargo Tracking Note is scheduled for implementation in the second quarter of this year, setting the stage for enhanced revenue generation and operational oversight. That has been one of the major things that the ministry had done in the last year, trying to drive that process to create other streams of income for the agency.
The Minister of Marine and Blue Economy, Mr. Adegboyega Oyetola, represented at the retreat, endorsed the Council's ambitious plans to transition into the Nigerian Port Economic Regulations Agency, emphasizing that the retreat is laying the groundwork for regulatory excellence.
Your persistent effort in driving reforms, crafting policies, advocating for seamless trade processes, and optimizing maritime operations have continuously elevated our industry standards. Let us leverage this retreat as a platform for strategic dialogues that yield actionable insights.
Mr. Akuta also revealed that the Council's 2025 budget is tied to a 1% freight stabilization fee and will be implemented once the Nigerian Port Economic Regulations Bill gets presidential approval.
This 1% freight fee is embedded in the 1978 Act. The schedule to the law provided that the Nigerian Shippers Council shall collect 1% of the freight stabilization fee. So it is a provision of the law.
He described the retreat as a crucial step towards finalizing a 5-year strategic plan aimed at boosting efficiency, adaptability, and innovation in the maritime sector. Ifunanya Eze, TVC News.
And the stock market came down again as prices dropped following intense sales pressure. The index market measuring price growth turned by 0.05% to stress losses on investments. Dangote Sugar was the heaviest price decliner in the market with percentage above 6. Nascon followed with a loss of 5%, with Aradale Holdings, MTN Nigeria, and Fidelity equally closed negative. UBA made a strong gain on the back of huge biddings for trades. Others were GT Holdings, Zenith, First Bank Holdings, and Access. For volumes of trade securities, 390 million shares were crossed in the market.